welcome back to the channel. Today I'm just going to give you some tips on how you can grow a small Forex account. I've seen a lot of Forex traders on YouTube say you need like £5,000, £25,000 to actually make money in Forex, and in this video I'm just going to show you really don't need a lot of money, and I'm just going to give you ways that you can grow your small £50, £100 account up to that 1,000, then that 1,000 into 10,000 and so on. Because once you can do 10 to 100, then you can do 100 to 1,000. It's best to learn either on a demo or a small account with money you don't really care about losing. But ideally you don't want to be losing any money, so I advise going on a demo account before you go on a live account. But yeah, make sure you like and subscribe before we start this video, and make sure to watch all the way through to find out all the tips, because if you do one and not the other, then your account's probably going to blow. I'd say the first rule of trading with a small account, stick to the same lot size. So say you've got a £100 account, always use 0.01. Don't think, oh, I just won 3 trades in a row, I'm going to stick on a 0.05. Then if that trade goes wrong, then all your profits have gone and you're probably going to be in a loss. But yeah, you want to stick to the same lot size no matter what it is. With a £100 account, I'd say you should risk anywhere between 2 to 3%, which is like £2 to £3. And then your risk to reward should usually be a 1 to 2. So say you lose 2 trades, you only have to win 1 to be break even from those trades. Say it's a 1 to 1, you lose 3 trades, then you have to win 3 trades, be at break even. But say it's 1 to 2, you lose 2, and you have to make 1 back to be break even. One of the biggest mistakes beginner traders make in the markets is a revenge trade. So say you lose a trade and you still think it's going to go in your way, you keep like adding positions, or you stick on a bigger lot size to like gain back your profits quicker. I say this is one of the biggest ways people play their accounts, is using too big a lot sizes to try and gain back their losses. I'm guilty of this, I've done this when I started, but lucky for me it did pay off. I don't recommend doing that. I don't recommend flipping your account, like trying to go 10 to 300 or 10 to 1,000. Just go slow and steady, and once that compounds over like a few months or years, you will have a big Forex account if you just stick to the rules. I'd say sticking to 3 or 4 currency pairs is the best way to go, because once you learn once you learn their patterns and how they respect different zones, then you can really benefit off every single move of that currency. But say you're just flicking through TradingView, just going at every single currency until you find something that you like the look of, you just won't really have the knowledge of that currency and how it reacts to certain zones and areas. You want to have a set strategy written down, like the different confirmations that you want to see to enter a trade. You don't want to be like impulsively entering trades. So say you go on the chart and you see it flying up, you don't just want to enter straight away. You should wait for like a retest or something like that. Yeah, you shouldn't be just jumping in trades when you see it moving quickly, because it can go the other way very quickly in the Forex market because the volatility is very, very high. One of the biggest tips I have in Forex is to not let your emotions control your trading. So say you see your trade down 10 pips, don't panic, either enter another position or close your trade as soon as you see red. You want to trade like a robot. You don't want to get emotional by anything that happens in the market. Every trader has losing weeks, so just because you've lost 1 week doesn't mean you're a bad trader. You should just carry on, keep going, just keep testing your strategy, back testing, demo account, and once you've found one that works for you and it's working on the markets, then you can become a profitable trader. But as you know, the markets are 50-50, they can go either way, they can only go up and down, they can't go sideways. So yeah, you have a 50% chance. Everyone does have a losing week, but you just can't let it dishearten you and think you're a bad trader. You just got to keep going, because it's just part of the learning process of becoming a master trader. If you've taken a loss on a trade, just evaluate it. Don't panic and think, oh, I need to make this money back. Go find another trade quickly to stick a big lot on to make my profit. No, just keep going with your strategy, find those confirmations for each trade, and don't over trade either. One of the biggest mistakes people make is over leveraging. Say you've got a £100 account, I'd say the max lot size you should use is 0.01. It's the lowest lot size you can use on MetaTrader 4, and if you go any higher, then you'll just be risking too much of your capital. Say you grow your account higher to say £200, maybe you could use a 0.02, but I'd suggest using a 0.01 and just catching those bigger pip moves, because if you can trade with a 0.01 from 100 to 1000, then you can use a 0.1 from 1000 to 10,000. The final tip I have is to stick to the same strategy. You don't want to be following people's signals. You don't want to click on a chart and see something that you haven't traded before and then go and trade it. You want to do what you're confident in and what you've learned how to trade Forex and what works for you. Say someone trades divergence and they're profitable, doesn't mean you're going to be profitable from trading divergence. But yeah, I hope this video helped you grow your small Forex accounts. The 10 to 1000 challenge is coming very soon. I'm currently filming it at the moment, so make sure you like and subscribe and follow me on the Instagram, and I'll see you in the next video.